Do you think Kramer saying that GME is arguably the worst company in the NASDAQ is kind of bullish? It would be if GME was in NASDAQ. He was clearly talking about GMED, which is now probably ripping. Yep, it is. It's up 3% in like the last couple of days. 16, 17% since December. I have a question. We've been doing this a long time. We know each other pretty well, right? Like, how many more bottoms am I going to have to hear, woo, this is MOAS off of? None of these have been MOAS. Not one. It just keeps going down. Like, now do the DDS chart. I mean, hold on. That's only for the pigeon whales. Sorry. Gatekeeping shill. I mean, GoEV actually looks bullish as on the daily. You guys are just a bunch of paper-handed bitches. Ding ding. Hey! I got my clothes. Well, close enough. I can't believe those $70 call holders made $1.68. Kenny must be feeling really generous today. So overall, still distributing out across the high from yesterday and the upside price action. Obviously, getting hung up in the neutral positioning going into tomorrow, into the end of the day today. GDP is going to be very important, both for inflation expectations and for dollar valuation. I think current analyst estimates for GDP are far lower than they should be. I know Atlanta Fed is also projecting closer to 3%, and the current consensus is like 2.5, or no, sorry. Yeah, 2.5. I think it'll be quite a bit higher with the government spending that's been going on. Initial jobless claims are also in the pre-market tomorrow, retail inventories and wholesale inventories. So we have a bunch of data coming in. Expanding inventories, bearish for businesses. Initial jobless claims probably aren't going to move much. I think labor's going to stay pretty strong. And GDP should definitely be up. I think our like nominal growth rate looked like it was about almost 6%, and analysts are projecting quarter one advanced GDP at 2.5. I mean, the disparity is ridiculous. Anyway, we have support to the downside around this lower trend. That's where I would be looking for a breakdown, and then if we lose this trend, that would probably be around the 50-40 level on SPX, which is also where a lot of the more recent short vol is sold. So that's where we would start to see volatility kind of swing back to the upside. Broad commodities down. Looks like still just consolidation. Probably also waiting for more data and possibly another leg up in the dollar. The dollar is pulled back a little bit in anticipation of tomorrow as well. It almost swung back above 106 today, but it managed to stay kind of suppressed. Yields, however, did not. Pretty much everything across the chain moved up, with only the 2-year contracting. And I think that's largely because hot GDP would probably move the 2-year up and price out the remaining Fed rate cut that's still showing there. Core 1 month and 3 month continued to drop today, although at a slower pace than the prior 2 days. So still a lot of short vol coming in, these levels being heavily defended. However, because of all that defensive positioning, we're not moving up a lot. They're not really leveraging the out of the money gamma, and so we're not getting the big swings up that we need to break through gamma neutral, delta neutral, and actually get like an upside bullish trend, right? Carry trade levered up even more today. We talked about this a bunch earlier, and kind of some of the historic effects of leverage getting this high. The Bank of Japan rate decision is tomorrow night, and USD JPY is at 155.32, which is crazy. You go out here to the weekly and you can just see how actually nuts that is. It's the lowest it's been since 1990, and it doesn't seem to be stopping anytime soon. Forward yield on volatility closed the day just barely negative, so they're still fighting to keep that vol demand suppressed, and so far they've done an okay job over the last few days. getting that back down towards zero and backing off the backwardation in VIX. Tomorrow's data could flip that the other way pretty quickly. And if GDP is hot enough and inflation expectations rise enough, we could see the 10-year move much closer to 5%, which is kind of that critical margin level. And we could also see the 2-year move up pretty substantially, 5.25. Bond volatility probably up a little bit today, although this isn't going to reflect that yet because I think it updates 15 minutes after close. Skew pulled back a little bit yesterday, so some of the tail risk hedge fell off, but not much, right? We're nowhere, given the amount of Vegas sold, there's still quite a lot of tail risk interest. Like vol is easily as short as it was back here, but now there's a lot more defensive, like there's a lot more tail positioning for any kind of tail event that might occur. So participants are still a little scared. I think it kind of implies that at least. 36.38% of the S&P over the 20-day moving average. Not quite a bullish trend yet, obviously, but still moving up. Correlation between VIX and VIX futures actually stayed pretty flat today. I think 0.1% moved more negative, so a little less correlated at the end of today, but not substantially so. And earlier today we'd priced in about 4 more points of cuts than we're pricing in right now. GDP and PCE could both affect this pretty dramatically, especially with the FOMC meeting right around the corner. And we may see the entirety of the second rate cut priced out, which means down to 0.25 or maybe even like 0.2, depending on how much uncertainty that data holds. I guess we could cover the technicals real quick, too. As far as the daily is concerned, this still very much looks like a capitulation rally, right? Like an upside move to retest the 50 and then a rejection, right? This outcome is still far more likely than the bullish outcome of breaking the 50 and moving up. Obviously, knowledge of that will come at the test of the 50, or if we don't test the 50, right, which would be extremely bearish. But for now, I mean, this is still just a recovery from the drop more than it is an actual reversal, at least on the daily time frame. If we do get back above SPX, 51.66, 51.11, so we break the 50, clear the 66, that's probably more indicative of a longer term upside move, right? So still a long way to go on that front. Today was relatively flat. I mean, I guess down a little, not much though. So don't get too carried away with the bullishness. But yeah. Anyway, thank you guys so much for tuning in. I will see you all bright and early tomorrow at 9:30 a.m. I hope everybody has a great night.